In this example, we are going to prepare a bank reconciliation from the following information. So a bank reconciliation takes the amount that a company has in their checkbook and compares it to the bank statement balance. Oftentimes those balances aren't going to equal because of a series of situations that have occurred. And so our job is to take those situations and perform a bank reconciliation to make them equal. So the two things that you want to remember that always affect the bank statement are going to be outstanding checks and deposits in transit, and everything else is always going to affect the checkbook. So it's a matter of asking yourselves, okay, who knows about this transaction first? Does the checkbook receive the information first, or does the bank receive the information first? So the way we're going to start off is we're going to start off with our balance per bank, and that's A above. So we open our bank statement and it says that we have $6,655.44. But if you look at B says that our book balance, our checkbook or our cash account in our ledger says we have $12,091.94. So there's a significant difference there, and our job is to find out why. So the first thing we're going to do is we're going to look for any deposits in transit or any outstanding checks. And we have both of those in C and D. So we add deposit in transit, because a deposit in transit means you make a deposit, you write it down in your cash ledger, and you add it in. But it hasn't shown up at the bank yet, but it will eventually. So we want to go ahead and add it in now to get us closer to balancing. And then we look for any outstanding checks. And you can see for D, we have a lot of outstanding checks, $6,808.16 worth of outstanding checks. So outstanding checks are checks that you have written, your company has written, you've credited your cash account for those amounts, you've subtracted it out, but they just haven't cleared the bank yet. But as they clear the bank, they will be subtracted out of your bank balance. So we're going to subtract them all out now in order to get our balances to be equal. So after we add deposits in transit and subtract out outstanding checks, we have an adjusted bank balance of $12,082.09. We're still not equal to our checkbook balance, but there's a few other things that will help us get to that point. So after deposits in transit and outstanding checks, we're ready to start with our checkbook. So our cash ledger account says that we have $12,091.94. But we have some other things that have happened, such as a bank service charge. So when the bank charges your account a service charge, they automatically take it out of your bank statement. So that was already subtracted out of our bank statement. So now what we have to do is make sure that we do a journal entry and subtract that amount out of our cash ledger account, which is our checkbook. And keep in mind that you have to do journal entries for anything that affects the checkbook balance, our cash account. So once we subtract that out, we now equal. Our adjusted bank balance matches our adjusted book balance in the amount of $12,082.09.